The Nasdaq is currently closed, as it is a Sunday evening, but American Bitcoin Corp. ABTC last closed on Friday, November 14, 2025, at $4.92 in after-hours trading, reflecting a post-close gain of plus 1.23%, following a regular session that saw the stock climb by plus 2.32%. Now, the immediate expectation for a stock that moves like this, a Bitcoin mining and accumulation company, is that the recent volatility is simply a direct reflection of Bitcoin's price movements, especially given the general market sentiment surrounding the entire crypto complex. What many investors are missing, however, is that this stock's wild intraday swing on Friday, which saw it drop from an open of $4.54 down to $4.05 before rocketing up to $5.19 and ultimately settling near the mid-$4 range, wasn't just about Bitcoin. It was the market processing a major internal shift that suggests the company is executing a far more sophisticated strategy than its peers. This wasn't a passive reaction. It was a strong vote of confidence in their stated strategy, and that is where the real story begins. The common ground narrative is straightforward. ABTC is a Bitcoin miner, a majority-owned subsidiary of Hut 8 Corp., and its value is inextricably linked to the price of the asset it mines. When Bitcoin is up, ABTC should be up. When Bitcoin is down, ABTC should suffer. This is the simple logic applied to other companies in the space, and it often holds true for publicly traded firms with exposure to volatile assets. But let's challenge that. The recent Q3 2025 earnings release showed that while the broader crypto market was experiencing a downturn, with Bitcoin itself sliding significantly below $100,000 to the mid-$95,000 level around the time of the report, ABTC managed to post a significant rebound and positive closing price in the face of sector weakness. Why? Because the company's Q3 results weren't just good, they fundamentally validated their dual accumulation model. Revenue more than doubled quarter over quarter, hitting $64.2 million, and they flipped a prior year net loss into a $3.5 million net income. Crucially, they added more than 3,000 Bitcoin to their strategic reserve through mining and disciplined at-market purchases, bringing their total reserve to 3,418 BTC as of the end of September. This is not the profile of a simple, single-lever mining operation. This is a company intentionally building a Bitcoin treasury with mined coins at a structural discount to spot price, which is far more efficient than buying Bitcoin outright as a corporate treasury vehicle. Focusing on the immediate stock movement, the institutional activity around that earnings report is telling. The initial drop, the pre-market decline of over 6%, was likely a knee-jerk automated reaction to the initial disclosure format, or perhaps a broader market fear driven by the general crypto market weakness and the ongoing regulatory noise that perpetually hovers over the sector. However, the rapid and forceful rebound, driving the stock up to that $5.19 high and pushing volume to 5.2 million shares, significantly above the 3.03 million daily average, indicates that sophisticated money was quick to step in. This suggests professional investors, many of whom have accounts at Fidelity, or utilize institutional platforms like Interactive Brokers Trading, saw the underlying financial strength and the strategic advantages outlined in the earnings call. They weren't just looking at the headline Bitcoin price, they were looking at the substantial increase in mining capacity, scaling to an impressive 25 exahash per second, EH per S, with an efficiency of 16.3 joules per TH, and the gross margin expansion from 49% to 56%. That margin improvement, achieved during a period of rising mining difficulty and pressure on the hash price, is the most powerful evidence that their asset-light model, enabled by the partnership with Hut 8, is delivering cost efficiency that others cannot match. The tension between expectation, stock should drop with Bitcoin, and reality, stock rebounded on strong internal execution, explains the volatility and highlights the deeper value proposition. When we consider the underlying business model, American Bitcoin Corp operates as a Bitcoin accumulation platform. This goes beyond the traditional brute force Bitcoin mining model, which often sees miners sell the majority of their coins to cover operating expenses. ABTC's core tenet is maximizing Bitcoin per share, or Satoshis per share, which is a metric that gives shareholders direct visibility into the amount of Bitcoin their equity stake represents. As of early November, that SPS was at 432, a metric they actively track and update, reflecting a continuous accumulation strategy. This accumulation is achieved through high-efficiency mining and strategic at-market coin purchases, all while leveraging an asset-light structure that minimizes the capital expenditure typically associated with building and maintaining data centers, thanks to their comprehensive partnership with Hut 8. This partnership allows them to channel a greater share of capital directly into hash rate growth and reserve expansion, which is the structural advantage the CEO highlighted. This is a crucial detail, especially for individual brokerage clients who are used to platforms like Robinhood stock trading or an online investment platform for self-investing. ABTC is essentially giving investors a leveraged bet on both Bitcoin's price appreciation and the compounding effect of a hyper-efficient mining operation. The recent history of ABTC stock has been turbulent, a characteristic common to the crypto mining space. The stock's 52-week range of $0.63 to $14.65 underscores the massive volatility. The recent listing on Nasdaq, following a stock-for-stock merger with Gryphon Digital Mining and a 5-for-1 reverse stock split in September 2025, were necessary steps for stability and liquidity, but they also reset the playing field. The spike in hash rate, the company added nearly 15 EH/s of operational capacity in Q3 alone, is a testament to the efficient deployment of capital from its mid-2025 $220 million capital raise. While the headline net income of $3.5 million might seem small for a company with a multi-billion-dollar market capitalization, which stood at $4.41 billion recently, though the valuation multiples are high, the adjusted EBITDA of $27.7 million, a massive swing from a negative figure a year prior, reveals the true operational health. EBITDA is often a better measure for capital-intensive infrastructure plays like mining, as it strips out the noise of depreciation and the accounting complexities of digital asset holdings. The fact that the stock rebounded sharply on Friday, despite Bitcoin's short-term dip, signals that the market is slowly shifting its focus from simple Bitcoin price correlation to this demonstrated operational profitability and reserve growth. This is the rethinking that's necessary for anyone evaluating this stock. Looking ahead, the future outlook for American Bitcoin Corp hinges on three primary catalysts and one overriding risk. The first catalyst is continued Bitcoin per share growth. The market will reward the company if it can demonstrate a consistent, compounding increase in its per share Bitcoin holdings, especially as the next Bitcoin halving event approaches, which will further squeeze margins for less efficient miners. The second catalyst is potential M&A activity. The company has explicitly stated it is monitoring opportunities in the digital asset treasury space, suggesting it could leverage its valuation and access to capital to acquire smaller, distressed miners, thereby consolidating the industry and further increasing its hash rate and reserve inorganically. This kind of consolidation is a common pattern in nascent, rapidly expanding sectors and provides a clear growth path that analysts at firms like Fidelity Investments would factor into their models. The third catalyst is the broader macro environment for Bitcoin itself. While ABTC aims for lower correlation through operational efficiency, a significant upward move in Bitcoin's price, possibly toward the $170,000 forecast by some major banks, would act as a tidal wave lifting all boats, especially those with a large strategic reserve. The main risk, however, is the very volatility of the digital asset market and the regulatory uncertainty. The constant back and forth about whether Bitcoin should be treated as a commodity, currency, or security introduces systemic risk that a company like Apple stock or Tesla stock simply doesn't face. Furthermore, the reliance on an asset-light model, through a partnership, while efficient, introduces counterparty risk with Hut 8 that must be managed. For investors managing their own portfolio through platforms like Schwab Intelligent Portfolios or any other intelligent portfolio strategy, the high volatility of ABTC means it should only be a small, highly speculative allocation, likely handled through an individual brokerage account rather than a more stable, diversified approach using Fidelity ETFs or Fidelity mutual funds. The Nasdaq is currently closed as it is a Sunday evening, but American Bitcoin Corp, ABTC, last closed on Friday, November 14, 2025 at $4.92 in after-hours trading, reflecting a post-close gain of plus 1.23%. Following a regular session that saw the stock climb by plus 2.32%. Now, the immediate expectation for a stock that moves like this, a Bitcoin mining and accumulation company, is that the recent volatility is simply a direct reflection of Bitcoin's price movements, especially given the general market sentiment surrounding the entire crypto complex. What many investors are missing, however, is that this stock's wild intraday swing on Friday, which saw it drop from an open of $4.54 down to $4.05 before rocketing up to $5.19 and ultimately settling near the mid-$4 range,